with someone that we are familiar with in terms of the name and the role and responsibilities. My name is Sakiwa Nelani. My task is to facilitate the module that has been assigned to you as part of your LLB or your higher certificate in law. Basically is around the accounting for the legal practitioners. So I'm assigned to assist you in your journey in terms of moving forward and progressing towards the higher level in terms of your profession, whether from the legal context or in the business context. So this is a task that has been assigned to me. For me to be able to succeed, or in order to be able to be successful in your academics, a high level of teamwork will be necessary in terms of ensuring that we can be able to cooperate at the level of this academic facilitator and the level of the student and the level of the lecturer. So I'm part of the mediating role to ensure that areas that are not, clear as expected in terms of your academic journey, we are afforded this opportunity to make sure that we can be able to clarify those issues. This is an accounting mainly. Many people are being associated with the accountants, but the reality in life, accounting is affecting everyone. Everyone is participating in the accounting field, whether direct or indirect, including the legal professionals. Including the legal professionals, there is no attorney that is running a legal firm without involving the accounting issues. There is no the advocate that is running the firm that is not involving accounting issues. That is why it is so critical that we should be able to make sure that we understand what is an accounting, why is it relevant in our profession. So my task today is to articulate explicitly around of the key concepts that are relevant in your own journey. We'll meet on a weekly basis. We're going to meet on a weekly basis each and every Thursday per week. We are expected to have a session. Before I wrap up the session of today, I'll be able to share up the schedule, which is outlining what is expected in terms of the session and the number of sessions for the semester, which is in unpacking everything. I hope that we've managed to go through the module overview. The module overview is summarizing very few issues. Very few issues. We're expected to dispose 8 learning units that we're expected to dispose in a 6 months period. But if you look at the period from now, it means that we are expected to have some sort of the emergency plan. Emergency plan will be our own responsibility, it will be our joint responsibility to say, how do you cover the lost ground? But the lost ground is not materially if we are committed in our own job. Today, we're expected to deliver on the nature and the function of the accounting. The next week, we're expected to deliver on the issues of the double entry accounting system. I will be able to explain those terms. We're going to deliver on the issues of VAT. We know what is happening in our national government in terms of the VAT increase, and it doesn't affect a particular category of the people. The VAT is affecting all of us, regardless of the status, whether you're working or not. As long as you've got a buying power, you will be subjected to a taxation, which we call it is a VAT. Then the learning unit 4 will deal with the issues regarding recording of transactions in terms of the journals. The unit 5 will deal with the ledger, trial balance, and the financial statement. The last 3 units, which the 6, 7, and 8, will be mainly dealing with the issues of transfers. We know very well that sometimes we've got the instructing attorney the instructing attorney engaging the advocate on a particular matter on behalf of the client. So be able to deal around those issues proper, and also dealing with the issues of the trust, investment, and correspondence. I do believe that we also engage on the issues of the MyUNISA. I want to clarify this aspect before we proceed. Before we proceed with our own session, make sure that your level of familiarity in terms of the instruments that are being used at UNISA, in terms of your submission of your assignments, everything is being uploaded there in terms of the portal. Then we are expected to utilize those information. We are also expected to check the deadlines in relation to assignments. So these are the instruments that are also important for you for utilization. It is also compulsory that you look your tutorial 101. Tutorial 101 is having the basic information in terms of the module lecture, the contact details, the email address, so that any challenge that must be experienced during your academic journey, you know exactly where to communicate along those dynamics. I explained my name, I explained in terms of my academic history, but what is outstanding, I'm also a practicing internal audit in the public sector. I enrolled a number of degrees, which is including a legal degree. I enrolled 2 degrees at UNISA, including the BCom law. So I'm relevant in the sector. I'm relevant in the sector in terms of the disciplinary approach. So I've managed to accumulate sufficient information to be able to discharge whatever the task that has been allocated to me in that context. I indicated to say it's important. You've got ambitions to be a lawyer, but there's this animal that is part of the module, that is part of your curriculum, which is an accounting. So it's important that to understand what is an accounting. What is an accounting exactly? It's very explicit that to say the accounting. Obviously, in your law firm, you'll have clients. Clients who won't come directly to your offices. Will be able sometimes to go and make some deposit in your bank. You will also come to make some deposits in terms of your cashiers. All those activities are being recorded in appropriate journals. And at a specific time, in terms of the month end, you should be able to draw up the reports. And those reports should be able to be interpreted so that can be able to reconcile. So those are the events that need to be recorded to make sure that there's a proper accountability. But in the context of the financial accounting, we are saying these are the accounting so that we can be able to make some recordings. Critical to that, we are also articulating that to say accounting is a language in a way. Why is it a language? Why do we regard it as a language? Why do we regard this as a language? It's a language in the sense that all of us that are involved, whether in business or in the legal field, we are expected to draw up reports. We are expected up to draw a report, and those reports are expected to be interpreted, are expected to be oversighted by the management so that can be able to make the appropriate decisions. So accounting is a language in that context because you process the input of the information so that the output in the form of reports can be generated and made available to the directors. So that is why it is so important. It is so important for us to understand exactly what is an accounting is, what is the nature and what is the purpose of the accounting, and how does it relate in our own module, the module of financial accounting principles for the law practitioners. So it does apply. It does apply. Can we be assisted, colleagues, and obey the rules? Can we be assisted and obey the rules? I can see from the chart, say that the slide is not reflecting. Mbali? Can you see my slide, Mbali? Why is not reflecting on the side?
They can respond. They say it's okay. Thumbs up.
Those ones that can see the slide can make some indication. No. Because on my side is, you can see, Sandra can see the slide. Can those ones that are unable to see my slide to quickly log out and log in immediately, so that you can be able maybe to see my slide, because some of them can see, some of cannot. I doubt my problem is in my PC. Can you do that favor, just to log out and log in? Okay. So that we don't disadvantage anyone. Andile, can you see my slide? Yeah, Andile is sorted. Yeah, if students, you can do that favor, just log out and log in, then you will indicate. I wonder. Let me just log in a student. Let me just log out and log in, because I can see the majority. It doesn't see my slide. Just be patient.
So try and put it on the presentation mode, sir.
On the presentation mode. I did on my side. How's it now?
No change. No. And share the presentation, then we'll share it again.
Yeah, I think so. Can you see now?
Yes, the student are saying thumbs up.
Thank you very much. Apologies for that. Basically, I started on this page 2. Basically, was just the definition, just to orientate or induct you to the field, but what is an accounting is. But I try to avoid it to be generic in this aspect, to say, I fully understand your ambition is around law, whether attorney, admitted attorney or advocate, but the essence, you will be dealing with money. And that money, you will need to have some internal controls for purposes of accountability at the end of the day. We are recording transactions. We call that the money that is coming in and recorded and processed, and printed in terms of the report. All that process of, system in terms of your input and processing of your input and processing of your output as a system. We call it as a system. It's an accounting. So accounting involves all those recording activities that are occurring in your business, regardless of the type of the business, whether it's a sole trader or it's a company. But as long that there's the money involved must be recorded. And in our own business world, we call it as an accounting, that aspect. So it does apply in your own field in terms of your career and in terms of your business ambition. So we're trying to make some definition in terms of that regard to say what is the nature and the function of the accounting so that we can be able to do some certain orientation in that regard. On this one, we are saying that accounting is a language. Not necessary to say it's a English or Xhosa or Zulu language. It's a language in what context? Accounting is being used to process transaction for purposes of communicating to those who are in charge in governance, the managing directors, the employees, the management, and so on. But how do you communicate with them? We write reports. We produce monthly reports, we produce quarterly reports, we produce midterm reports, we produce annual reports. And the users of financial statement or account information should be able to understand. So it's an accounting is a language in that context. We are communicating to those who are in need of the business information. Whether you are running your law firm, we are expected, maybe you have a managing director who is stationed in Johannesburg, but is having the entire operations in the country, operations in Gqeberha, operation in Cape Town, operation in KZN, but ultimately all those operations must be able to generate reports in terms of the financial viability of the firm and produce those financial reports. The director should be able to interpret those reports, hence is characterized as a language. So it's a language in that context. We articulated why it is a language. But critical to that, these are the forms of businesses that are articulated in the context of the South African business. We are having these forms of business. We've got a sole trader, we've got partnership, we've got close cooperation, we've got companies. All these businesses, that is where the accounting is being exercised. If you talk about your own context, you completed your LLB, you went through the relevant articles, you decided to open up your own legal firm, obviously you'll be part of the first bullet in terms of the sole trader, because it will be the business that is open to service the community, but is opened by you. You are only one person that is running that particular type of business. We have also articulated that the sole trader is dominant in terms of the township areas. If you look at how the township is being, structured in our own context, there are a number of spaza shops and are family owned. Those type of businesses are sole traders in the context of business. You look at the taxi industry is also run by the number of people who are sole trader in the businesses. But if you look at the partnership is also a form of business, but it's not a business that is run by only one person. It's a number of person starting from 2 people to the maximum of 10 who are running these businesses. But if you look at the sole trader and partnership, there's something that is common in character. The lifespan of these 2 businesses has a directly linkage to the founders or to the owners of the business. So it's a common characteristics between these 2, because if the owner dies, the likelihood of that business is also died, because it's not independent in terms of its own existence, the sole trader and the partnership. But if you talk about the close cooperation and companies, those are independent registered in terms of the South African law to make sure that whether the directors are there or not, their own level of existence in life will continue trading, will continue to trading. The asset and liabilities of those companies belongs to those companies. So these are the forms of businesses. Whether you decided to open up a firm, we are expected to fall into one of these categories of the forms of businesses in South Africa. I indicated to say we are studying an accounting. At the end of the day, you're expected to generate reports. Those reports, who is expected to use those reports and for what purposes? So we're having a number of users of financial statements to understand for different purposes, for different goals and objectives. Investors are also interested to know how the business is performing. Management is also interested how the business is performing. The investors, the creditors, the government, all these people are people that have different interests in terms of the financial performance of financial business, the financial viability of your business. They are not limited to this. There are so many, but what is key are having interest in your financial information of the business for different interests. Let us create for an argument, around these users that are articulated. You can select anyone of your choice. Let us have maybe an argument to say, an investor, why should be interested in financial performance of your business? Regardless whether it's sole trader, partnership, or companies, it doesn't really matter why this investor should have the interest. Anyone want to attempt? Anyone?
Good afternoon. I think they might be have an interest because of sometimes they wanted to invest into the business.
Okay, it's a fair attempt. Anyone? Why the investor should have the interest in your business? Yes, Nomalungelo.
Hi, can I try?
Please.
Oh,
Please,
yeah.
Mugelo.
I think the reason they should be interested, at first they need to look at the potential of the business. If the business is gonna grow, if it's performing well, things like that, then they can invest. But if they can see that the business is not doing very well, then it should be a loss to them.
Okay.
Yeah.
It's 100% correct in terms of the investment. Yeah, it's an obvious, it's important, even if you look at the South African context, the top 10 richest people. Motsepe is a legal guy, What does it mean? It means he has managed to identify opportunity and do investment. But you don't invest where there's a possibility for loss. You don't invest to any business where you can see is not moving to the desired direction in terms of the profitability. But to be able to see that information, you should be able to have the capacity to analyze the financial reports. Financial reports should be able to tell you whether you can take this decision or not in terms of the investment. Thank you very much for that. Let us go to government. Why government should have the interest? Why government should have the interest?
So
yes,
I think because government, it has to do with tax purposes, to see if whether your business is making a profit and will be taxable and you are complying with tax. I'm not too sure, but I think it's one of the reasons.
100%. 100%. You know that is 100% correct. We are involved in this accounting space so that we can be able to make a determination whether the business has made profit or loss. Obviously, if the business is not making profit, is making loss, there are no possibilities for tax on that. Government, we know very well that is making income on the basis of the taxation that are being imposed on a different categories of business. So in that context, the government is always having a concern whether your business health ratios seeks to suggest that you are doing well or not, knowing very well if you're not doing well, there will be no income for government. Government is here to make sure that there's a social services, there's a Department of Health is provided with budget for purposes of medication, schools, and so on and so on. Government is generating income through taxes, therefore is becoming to have the interest on the performance of the business. Let us look at employees. Why employees do you think should have interest in your financial reports? Employees?
Can I try employees?
Yes, please.
I think it is essential for the employees to know the position of the business because every year they are interested for increase. For them to be able to approach the management for increment, they must know that there is a going concern on the business. Thank you.
Thank you very much. Thank you very much, Tolisile. We are raising a very critical issues of going concern, but we'll be able to engage on the subsequent pages on that one. Yeah, thank you very much. For example, if your business is not doing well, there are possibility of retrenchment. So employees should be worried. Should we have an interest? Should have the interest on how the business performance? Because if business is not performing, likelihood of retrenchment are high. So issues of salary increment are affected. So there are a number of issues that we need to be concerned, as we are running our own business, because there are a number of factors that are being, critical for the survival of us, because we are being employed, but we've got family responsibility, we've got kids that you need to take to school. So if you're being, retrenched on the basis of non-performance of your business, so business financial information is critical for employees in that regard. I think we've covered investors, we've covered, what about creditors? Why creditors? Yes.
Can you hear me?
Yes.
I wanted to say that for creditors, they want to see if they give you money, if you'll be able to pay it back, depending on your company's performance.
Okay. Fair comment.
Can I try?
Yes, please. Can you engage us on that? Why creditors should be worried?
Because they want to access a borrower's ability to repay their debts by evaluating their financial health and stability. I think.
Yes.
Can I try also?
In terms of the principle 100%, can you also try the third one?
Yes, it's because the creditors are the ones who provide capital and the resources for the growth and stability for the business.
Okay. Anyone also want to come forward and simplify the term of creditor? What creditors anyway?
Me? Can I try?
Yes, anyone. What creditors anyway in the context of business?
they need the financial reports of the business to see if they're eligible for a loan.
Okay.
I think, say, creditors are the organizations that the business owes money or stock per se. Those are
Yes.
considered to be creditors.
Yes, yes, yes. I was just looking at that simplification, you know, in terms of these terminologies, you know. All of us are correct. All of us are correct. Let us, for example, if you you own a business, let us simplify it. You own a township spaza shop. Your products, you don't manufacture those products, but you go to wholesaler and buy in bulk, but there's an agreement, you know, between you and wholesale to say, I will supply you my products, but we are expected to pay me within a period of 30 days. So suppliers and creditors, the same thing. But in this context, why a creditor should be concerned or have the interest in your financial reports? If I give you my products to say pay me within a period of 30 days, but if you are in financial mess, obviously you won't be able to fulfill your financial obligations. So that's correct, but I'm happy with the simplification of the what is a creditor is, because these are the terminology that we'll use, your creditor, your debtors, and so on. But in the simplest language, these are the suppliers of your products. If you have, you know, a business in the context, at least we've tried to make some simplifications, you know, in terms of what are the users of the financial information. You know, if you progressively go forward around that, you know, the users are further, you know, categorized in terms of the internal user and in terms of the external users. Internal users indeed is management. Management are those who are responsible for the running of the business in terms of the day-to-day, to say, you know, for us to be able to know we're performing, you know, what are the sales of a particular product? Have you managed to meet your set targets? These are the internal information that you must know. I think I'm covered how the student has articulated the issue of the employees, why the employees should have the interest. Then if you look at the external arm of these financial users, you'll find the issues of the investors, your creditors, and government. These are the, you know, stakeholders that are outside your business environment, but having interest to your business operation. So that is how it's being structured in terms of your guide. You should be able to articulate these users of your financial information. If you able now your exams or your assignment, you are also being questioned in terms of the categorization of these users. You should be able, and you should be able to support your argument in terms of your facts. Why do you think this one is an internal user and why do you think this one is an external user? I think will be a fair comment in that context. So it has been, you know, categorized, these users. They are not, you know, centralized under one arm. So they are users from internal, they are users from external environment. As we progress with this issue of the accounting has got branches. I would say it's got branches. In the practice, we do have those who call it as a chartered accountants. We do have those called certified management accountants. Even in your space, that process of recording of receipts and so on falls within the category of financial accounting, because you want to know how much money that has been managed to be banked, how much money that has managed to be paid, a particular service rendered, and so on. All that one falls within the component of financial accounting. In most cases, the chartered accountants are being, a part of that category. Then the second category we do have at management accountants. The management accountants, in many instances, if you go to the industry, are the ones who calculate the cost of a product. You know very well that in the manufacturing industry, a raw material is being purchased, the raw material is being, processed into a finished product. But all those stages, there is a cost involved. All those costs involved, they need to be calculated, and calculated, and the necessary markup to being calculated so that the selling price can be able to be determined. So those are the job for the management accountants. Beware that the accounting has got various of branches. In the main is a financial accounting, and in the second one is a management accounting. You also need to be familiar and what is the purpose of each category, what it serves and what are the participants in terms of the personnel that are involved in that area. Then this one will be important for you guys. Accounting has got rules. It's got rules. But it's got rules not in the context of the legal field to say that we've got common law, we've got statutory, but we call this an accounting standards. Those financial accounting frameworks are meant to make sure that there is a standardization of doing business and reporting. Those rules are important because if you are treating a particular transaction as an expense, similar interpretation must also be, there is someone that is can we be assisted? Can we obey the rules, guys? Yes,
There's
please.
a background noise and we can't hear.
Yes. Yeah, that one is not behaving as a lawyer because we are expected to comply. He must obey the code, please. Yeah.
Unprofessional.
Yes. What we are saying, the accounting is good
Let's
rules.
all mute our minds. This background is some of us can't hear.
Please, guys. Can we comply? We see the rules, and those rules must be obeyed, please. We are saying on this slide to say there are rules even in accounting. But what is important for us is to know what are those rules, where those rules were originated. In our own context, the financial reporting is being governed by International Financial Reporting Standards. We call it IFRS. IFRS is meant to make sure that there's a standardization in terms of reporting. So you are expected to know these standards very well to say, if you are doing a financial statement, a statement of financial position, what rules have you been followed in the compilation of those particular financial statements? So are important these rules to be in existence to make sure that there's a standardization of reporting across the country if these financial reporting standards have been adopted as an acceptable practice. But in South Africa, the IFRS is being used, especially in the private sector. In government, they are using the general accepted, the general recognized accounting standards. But in private sector, they are using the IFRS. You also need to know what board that is responsible to look at these standards. We've got the International Accounting Standard Boards that is responsible to make sure that the ongoing reviewer, to make sure that the standards remain relevant. That board is expected to sit in a certain interval and review those standards just to check whether they are still relevant in terms of the practice. So even the accounting, their loss. One of the sub-component that is being used, they call it as an accounting policy. Accounting policy is just a body of rules to say, if you are dealing with the property, plant and equipment, this is how you should, calculate depreciation. Depreciation is expressed at 10%, 15%, and the method for depreciation is a straight line or is a diminishing method. Just to be explicit in terms of the certain rule, so that no one is doing what is not expected, is doing what the policy prescribed. These policies are adopted by the board. Immediately there's an adoption of these policies, everyone is expected to comply in terms of observing of those standards during the preparation of financial records. There are theoretical principles as well, students. Accounting, I think one of the students was, articulating the issue of going concern. But critically for now, we must be able to bring our own minds closer. One of the critical underlying assumptions in accounting is an issue of accrual basis. When you are doing accounting, we are doing an accounting on accrual basis. We must need to get an understanding what is an accrual basis. How does it apply in the business sector? We also need to get an understanding, which is an assumption that is allowed, which is a going concern. These two assumptions are very critical for the business, in terms of the application. So can we also open up an argument around these two assumptions in relating to the fundamental theories in accounting? These two, just to check what is the thinking. And we are adopting the same principle, students. There is no right or wrong answer. All of us were here to learn. So let us just get the thinking. Think about of the business, think about of the assumption that is being used. One of those is an accrual accounting, and the second one is a going concern. Let us address the issue of the accrual accounting. What is the thinking of the accrual accounting? Accrual accounting. If you say that your accountant, you are the managing director of your law firm, then accountant bring forward a report and present to you, the managing director of the law firm, to say, this report, director, has been prepared on the basis of accrual. And these are the income, these are the expenses, and so on and so on. What is an understanding of the accrual accounting?
Can I try, sir?
Can I try?
Yes. Yes, you can try, please. There is no right or wrong answer at the present moment.
Okay. I was not sure if it's me or the other one, but I believe an accrual accounting, it is whereby a certain institute. Is someone on the floor?
There is someone.
Is there someone who?
Can you assist us?
Okay.
Yes.
So
yes,
I was saying accrual accounting, it is whereby an institution or a business recognizes its revenue and its cost when they are earned, instead of, or maybe irregardless of when we have received or when we are paid for that particular thing we are selling or trading for. So it's basically a recognition of when we have earned instead of when, irregardless of when we are paid.
Yeah, thank you very much, Siva. You sound like an accountant, Siva. It's a fair attempt. Anyone want to input?
Can I try? Can I try?
Yes. Yes, please.
I think the accrual basis of accounting in terms of revenue, you need to recognize it when you have ended, such as income, and then the expenses are recorded when they are incurred, when you incur an expense such as water and electricity in the business.
Okay. Vuelo, you also want to chip in, followed by Ngobesa?
Can I give it a shot?
Yes,
I
please.
did answer.
Okay. So my assumption basically, I think it mostly relates to creditors, and these are people who owe the business. Let's say, for example, a creditor maybe pays in some money, or not, let me not say a creditor, but let's say, for example, a client, I have a legal firm, a client comes in and wants some services, but they don't pay on the spot. Let's say, for example, they don't pay on the spot and they promise that they're going to pay at a later stage. It happens maybe that that transaction is recorded there and there, but not as when, like, I'm not sure whether I'm painting the picture correctly here.
Is 100% correct.
Okay, thank
All
you.
of us are correct, but you see the terminology, let us think that all of us are having business. All of us here. You sell a product to a customer, and your terms of credit is a 30 days to say, I'm selling this, you're gonna pay within a period of 30 days. Immediately that I issue the invoice to that particular customer to say, this is the invoice is due for payment, within a space of 30 days. I becoming to record in my books as if I received. I have not yet received as yet, but there's a money that is accrued to me. So in the context of business world, we call that is an accrual system of accounting. There's no money that is already paid, but there's an obligation to pay. There's an obligation to pay that I've used the product, but I'll pay it in the next 30 days. Then we are that methodology of recognizing income. At that particular point, we call it is a accrual accounting. Michael, you're 100% correct. It's an accrual accounting. It's an accrual accounting. There's no money that has flowed into your bank at the present moment, but you issue the invoice. There's an obligation that a particular customer will pay us in the next 30 days. But in our own books, we'll recognize that as an income. Why are we recognizing that? We are using an assumption that we call it is an accrual accounting. 100%. 100% fair comment around the issue of the definition of the accrual. It's an underlying assumption. This assumption is framed by International Accounting Standard Board to say if that particular event occurred, recognize that one as an income, and the assumption that is being used is an accrual accounting basis. Thank you very much for that. Let us attempt this one of going concern.
So can I try?
Yes, please.
Okay, so I think going concern, it is when we are expecting the business to continue operating in the future.
Yes, 100% for academic purposes. Anyone want to come in and simplify? Very simplification, so that the 232 people can understand this. I know I'm dealing with lawyers here. Going concern.
Can
Can I give
sir,
it
can
a
I
shot?
try? Can I try, sir?
Yes, please.
Okay, so when we look at going concern, is whereby we expect your business to still be functional for more than 12 years. For more than 12 months, sorry.
For more than 12 months.
Yes.
Yes, I
Sorry.
fully agree. I fully agree. You know,
Thank
the
you.
theory, it says that you must be in a position that you can presume that if For example, for us that were operating in a public sector who are dependent to the state in terms of grants, we normally do some calculation on the basis of the assumption to say, if government did not deposit grants on time, can we be able to provide our own self in terms of self-sustainability? Can we able to pay salaries for staff? Can we able to pay creditors? In our own context, we are saying, yes, if at least you've got an average of 3 to 6 months, we are saying this, at least you can survive. Remember, it's a state, not business. But for pure businesses, we say you should be able to survive in the next 12 months. But the basic equation around this thing, your liabilities versus your assets. Your liabilities should not be higher compared to your assets. So if your liabilities are so high to the extent that you will be adversely affected even to the next financial year. But the basic assumption that your relationship between your asset and liabilities, your asset must be always higher. You see, so the people are 100% correct in terms of the definition. That says the theory that the business should be able to continue trading, within the reasonable, foreseeable future. Basically, it says that you are not going to be liquidated. We are not going to be liquidated, but if your liabilities are higher than asset, it means your creditors can take you to court to force you to pay them. Maybe in the process, the business can be liquidated on the basis that is unable to fulfill its own obligation, on the basis that is unable to pay its own employees. So the issue of going concern is very critical in the business sector. So thank you very much. I think the issue of accrual accounting is
Excuse me, sir.
Yes.
So in simple terms, when we talk about going concern, we are saying that the business assets should exceed the liabilities. Then we can say that is a going concern.
Yeah, it's a combination of factors. Look, when you look at the statement of financial position, you must able to have that conclusion that your asset versus liabilities are higher. Then when you look at the statement of financial position, when you look at the statement of financial results, your income statement, your expenses should not exceed your incomes.
Oh, okay. So basically, the business is making a profit.
Yes. So you must analyze your financial statement holistically, because you can have income, making profit, but if you look at your asset and liabilities, but your assets are higher. So you need to analyze those financial statements, holistically to make a determination whether your financial health, you are in a safety margin or you are at a red zone. You analyze it. You analyze holistically. It's just like if you are an employee and you want to embark in a process of a bond or in a process of a loan, these financial providers, they do a credit worthiness analysis just to check this person, can be able to fulfill the financial obligation in the next 3 months, 6 months, or to 20 years. But if their own analysis, they say this person, they will categorize you as a high-risk person. In other terms, you won't be able to fulfill your financial obligation. Therefore, it is not wisely to grant such a loan to this particular person. So you in the context of business, you must analyze holistically from financial position perspective and financial results perspective. You must always have a positive margin in both financials. So we are correct even on that regard. Then obviously the going concern at the present moment, it says in the next 12 months. It means in the next 24 or 36 months is beyond. But for now, the minimum measure that is articulated by our own theory, say in the next 12 months. Even here, if you look at the theory, it talks about your expenses. It talks about your expenses. It talks about your cash flows. Your cash flows is talking about whether you've managed to acquire a property or you've managed to sell out your property. You analyze those things, but critically you must be at the positive zone in order to classify as a going concern. There are these fundamental qualities that we also need to understand. When you're dealing with financial statements, what are the characteristics? What are the characteristics? I indicated the forms of business. You know, those forms of business, the only way that you can make a distinction from one another is to know the characteristics. When you talk about your statement of financial position, anyone is talking? Well, I'm saying, in order for you to be able to identify whether a business is a sole trader or a company or a partnership, there are certain characteristics that you must be able to identify. But these ones are fundamentals, you know, are fundamentals in terms of that regard to say, obviously, the financial information must be relevant. The financial information must be faithful. What does the relevance mean? What does the relevance mean? For example, if I'm running your spa, you know the products that are delivered spa. We are dealing with the finished products that are ready for human consumption. But I should not expect now when you come up with the report, you're reporting on the issues relating to the stock, livestock, you know, in terms of cows, how many cows that have been sold. So that information is irrelevant in that context. You only bring the information that is relevant for the purpose at hand. For example, if I'm running a legal firm, I know very well that I'm talking about a service. I'm not talking about products. So you cannot bring a report that is talking about products. You must talk about the service element. To say so many clients have managed to be represented at court. So the issue of relevance applies in that regard. It must be relevant. It must be fit for the purpose. The issue of faithful in terms of presentation, there should no lies, you know. Your report must be trusted. There must be minimum errors, or there must be free from errors. For example, if my income is determined by the number of, you know, court, the number of times that I attended court, obviously the rate is not equal in terms of the magistrate, in terms of regional, in terms of the high court. But I cannot lie to say I attended 15 times per month, but knowing very well that I attended 5 times. So the issue of faithfulness, apply in that regard. You know, the issue of financial statement must be trusted, because this financial statement is a statement that you can go to the bank and borrow money. So if it does not reflect the reality of the state of affairs, does not comply to that fundamental qualitative character. So hence you see in many organizations, financial statements are subjected to auditors. They want to make sure that what is being reflected and projected are fairly presented. So these are the fundamental qualitative factors that you also need to know when you are reading financial reports. Whether you're an attorney or an advocate or an accountant, what are you expecting from that particular report? Can you be able to make a determination in terms of relevance? Can you able to make a determination in terms of the faithfulness? Faithfulness, you should be able to recalculate those figures according to your own at a high level, just to test whether there's a correctness of the issues that are reflected in that regard. So that's what they call this is fundamental. So you must also be able to, to be vigilant around those matters. We indicated the above in terms of the qualitative factors, but there are certain variables that also need to be available. When you're running, for example, a construction company, you should be able to make some comparison in terms of your financial period, reading a trend analysis. But whether this financial statement, if you analyze financial statement in terms of comparatives, the last previous year to the current year, what assumption can you draw? If you compare your company with a company that is in your similar level in terms of category, what can you compare? Are you performing well, or you are performing below the standards? So these are the issues that are important in terms of enhancing your qualitative character in your business. One of these is the comparability of the information. Can you compare? And you compare for purpose of drawing a particular decision, whether my performance, is it good department to department, or is it bad department to department, or is it bad company to company, or is it bad in terms of year to year? So there are a number of analyses that you should be able to apply in that regard to make sure that the conceptual framework is also, enhancing the qualitative characters in that regard. Second variable is an issue of the information must be verifiable. In simple terms, it must be auditable. It must be auditable. And someone is reviewing your financial reports must be able to really to get a sense, without really going extra miles, to say, what does it mean, these reports? And if your reports are being questioned in the context of external auditors, you should be able to provide a documentation that is meant to support whatever that is being claimed in your report in the context of the assertions. Also, the issue of time. We know that it's common in South Africa. The financial year of businesses takes a period of 12 months. Whether it started in January, or started in March, or started in July. But as long that the interval of 12 months is being observed. So we should be able also expect that, at least the board of directors, will be able to obtain these reports at the end of the financial year in the context of the annual reports and so on. The issue of the information must be understood. Must be understood. It must be understood in what context. At least people who are responsible to receive this information. We identified before the issue of users. Those users must be competent enough to interrogate those reports. To interrogate for different purposes, of course. Government, we interrogate the information for purposes of taxation. Management, we interrogate information for purposes of planning. Employees will interrogate for purposes of association with the company because of its reputational reasons and so on. So this issue of understanding of the information, others is understanding for different aspects. So it's also very key to enhance the qualitative character in the context of the accounting. So there's also an issue of cost versus benefit in the accounting. The cost versus benefit. You can't, for example, the issue of cost versus benefit. You can hire a security guard to come and provide security services of your shop, but the products that are being sold, in the shop is a little bit, lower compared to the amount of money that we pay over to the security services. So the issue of cost versus benefit is around on the principle that you can't defend something that is of a little value, with a cost that is higher. So you must always have a balanced approach, to say, yes, I know this is a risk involved, but I can't go to that extent of spending more defending a product that in terms of the value is lesser. So the issue of cost versus benefit is a decision-making process. Probably on this one, let us again open up an engagement.
Excuse me, sir.
Yes.
So, say in terms of the financial statements characteristics, we can say they are more or less the same as the characteristics of any information, considering these characteristics that you've just mentioned. And also in terms of relevancy, I think also the financial statement should be structured in the language that the audience that is intended to, that they know and that they will be able to relate to.
Yes, exactly. Hence, do we have rules? Those rules in terms of international financial reporting standard, we know exactly when you look financial statement, if you talk about asset must be allocated where? If you talk liabilities must be allocated where? If you talk about expenses must be allocated where? We should not ask when the report is in front of us. We know exactly. But in terms of rules, if this accountant is providing a statement of financial position, what at least is expected to be reflected in that report? You see, so the issue of relevance is also applied in that context. You cannot bring, an asset in an area where I expected to put a liability line. So the issue of asset in the right place is key, but if it's misallocated, you actually allocated the asset in the wrong place, it becomes irrelevant in that area. So it's quite correct. Let us engage on this one. Let us start on the first component, on the asset. Anyone that is got an understanding, an asset, what is an animal of asset? When you talk about an asset, we talk about what?
In simple terms, say are the
Can I try?
belongings of the business.
Okay.
Yeah. Can I also try?
Yes.
But I think the assets one is very simple, sir.
Yes.
For example, when you are maybe a taxi owner, your taxis are your assets. So
Yes. Okay.
things like
So
that. Yeah,
excellent.
sure.
Excellent.
So I was gonna say
Can you really?
an asset.
Yes.
I was gonna say, so an asset, it's a resource that is owned or controlled by the business. For example, if we were making an example of an intangible asset, a business can have a copyright, meaning to say
Yes.
someone cannot issue anything without us agreeing to it, meaning to say we now own or we can control that resource, then it becomes our asset.
Yeah, thank you very much. Can we articulate this issue of asset now in the following context? Are you familiar with the current assets and the non-current assets? Can we define assets along those dynamics between non-current and the current?
Sir?
Yes, sir.
Non-current assets are those assets that stays or are in the business for a long term, exceeding 12 months. For instance, your vehicles, land and buildings, equipment, those are considered to be non-current assets. Then the current assets are those assets such as banks, cash and cash equivalents that can be disposed within the period of 12 months.
Okay. Excellent, my brother.
So you just disappeared. We can't hear you now.
Excellent, excellent, colleagues. Excellent. I like this definition of a non-current asset. You can relate even in your own to say, if I'm running my own attorney firm, how do I categorize a building that I occupied? And this building is owned by your own building, by your own business, I mean. That building, the lifespan of that building, it goes beyond 12 months period. Goes beyond, can go 5 to 10 years. Then it becomes a non-current asset. Then how do you treat the issues of property, plant, and equipment? You've got a car. This car does not belong to you as a director. It's a company car. How do you define those assets? It's a long-term asset as well. So I'm happy with, because as much this is simple to identify these assets, but they must be careful in terms of the categorization, whether is it a non-current asset or a current asset. Can we go to current now? At least one is, the bank is already mentioned, which I'm in agreement with that. What other current assets? Except the bank. The bank, yes, inventory.
Yes, whenever it can be converted into cash for like a period of less than 12 months.
Exactly. Exactly. I fully agree. For example, if we decided to close down our own shops, but we're believing that if we can postpone this thing in its next 12 months period to close down the shop, but we can be able to convert the stock into cash by selling everything. So that was one, they being classified as the inventory in terms of graph 12 of general recognized accounting practice. I'm in agreement. So inventory and cash, cash and equivalent, which is the bank, is answered. What other current assets?
Yeah, I think it's debtors control, which is now known as trade and other receivables.
Thank you very much.
Petty cash.
Thank you very much. Petty cash is also part of cash and a cash equivalent. Thank you very much. Yeah, for our own context, as we are doing this nice group work and teamwork, those data simplified so that all other students can understand. Data are the customers. Are the customers, are the people that you are selling your service or product. We call it data and accounting. Thank you very much for that input. So let us progressively go down now to look at the liabilities.
Sorry, sir.
Yes.
Before you go to liabilities, I want to know if the tables can be non-assets.
What?
The tables, like the furnitures. Like furnitures, like tables, chairs in the office. Can I classify it as a non-asset?
Yeah, let me assist you. If you check the theory, it says that the non-current asset is property, comma, equipment, and plant. So anything that falls in that category, property, equipment, and plant, will be your non-current asset.
Oh, okay. Yeah, now I understand.
That is your criteria. If you come across with the asset, but when you say property, plant, and equipment is not featured there, it's not a current asset.
Okay.
So can I ask something?
Yes.
Under my notes, I got land and buildings, office equipment, furniture,
Yes.
and vehicles. So what she
Yes.
asked me is furniture. I understand when she says tables, those are under non-current assets.
Yes, but the criteria is that, madam. The criteria is that your property, I'm referring to the building.
Okay.
I'm referring to fittings, whatever that is being owned by the business, but the lifespan is beyond 12 months. For example, there is no, under E, is equipment. We are referring to computers. There is no lifespan of a computer that is a year issue. It's beyond that. So when you do your analysis, please map it under property, plant and equipment. But does this thing falls to that? And visualize it as a director of your company. Or in essence, if I bought a computer next month, I throw it away, simply because lost value. The answer is no. So it falls on that. So if you buy a car, in the next 12 months it's gone, so you throw away, the answer is no, it falls that. So if maybe a construction company, you've got this yellow plant, can you use a year, then you throw it away, the answer is no. So those ones are non-current assets.
Okay. Yeah, thank you.
Then now your current one. When you talk about inventory, we are referring to products that we are selling. The likelihood that things are get expired, you can't allow to keep issues more than 12 months period. If you something that you can sell it within a 12 months period, then is a current asset. It means you can make money, you can have money in the next 12 months in that particular asset. Then if you talk about your bank, you can do facilitation and draw all your money that is sitting in a bank account within a period of 12 months. Even 12 months is too long. Then if you talk about debtors are being afforded 30 days, 60 days, 90 days to pay. Yeah, they are not given, 3 years, 5 years to come to the shop and pay their own liabilities. It means they belong to current. There are a number of current liabilities in different forms of accounting in terms of prepaid and so on, but we'll deal with that when we progress with the syllabus. But to make that distinction, make sure that in your own definition, because when you read the academic side only to say it's a resource owned, you'll forget to make a determination in terms of the lifespan of the asset. But if you grasp the definition and also grab the lifespan of the asset and allocate according to the category, you'll be able to succeed in that regard. So I'm happy with the participation in terms of your assets and so on. Can we?
Sir,
Yes.
Sorry,
please.
sir.
Yes.
sorry, before we continue, I have an investment here. So
Yes.
I also want to, as a non-current asset, ne?
Why?
It's my name, it should be a current asset.
Use the same logic. Use the same logic, John. Look,
I try to attempt an answer, sir.
Yes. Use the same logic that we just debated. Look at the time frame for that investment.
Frame. Can't
It's
it fall under both above maybe 12 months? Because
Yes.
there are some investments whereby a person can invest maybe for 5 years to
Yes.
get returns or profit. But there are those that maybe they can be within 6 months or 12.
Yes, exactly. But the advantage is that of that particular asset, you disclose that asset separately. So there's no marks that you can lose, whether you put it because
Under any,
yes,
I
but
get it.
it's a standalone line item. But it's always
Investment.
wise. Once it says that's an investment for 5 years, put but closer to your non-current current assets, I mean.
Okay, thank you so much, sir.
So you see the issue of time is very tricky. It's very tricky. You look at that and see. But what is nice, it says sometimes it investment, sometimes it fixed deposit. Fixed deposit for how long?
Sorry, sir, can I say something?
Yes, please.
Yes. I just wanted to add something with the current and non-current asset, because if you look at the word current, it means now, right? And then there's and because you at the beginning of the session you did say that accounting is a language, even though the word current phrase now, but then um, in the accounting current, if you're looking at the current assets, there's a time span, even though it says now, but we are looking at the period of 12 months, which is a financial year or something. I think maybe we need that's one of the things that we need to understand. I just wanted to add that.
Okay. Yeah. It's crucial. It's crucial because sometimes if you invest, you agree that as much that I invested my money, but my interest must be repaid within a 12-month period. While still my investment, lended there to the bank, but the interest accumulated must be paid back. So there are a lot of dynamics, but I will explain as we move. Because there's an element of asset, there's an element of income on another side. But thank you very much for that. Similar approach on liabilities. Can we address the issue of liabilities?
Hi, sir.
Yes.
Can I answer that one?
Please.
So liabilities are basically a company's debt or obligations. An example of this is if a company took stock on credit. For example, they have a car company and they wash cars, and the products that they use, they would take on credit and then pay it maybe at the end of the month. And then you also get non-current and current liabilities. An example of non-current liabilities are liabilities stretched over a long term, which could be a long-term loan, or it could be a bond. So say, for example, you purchased a warehouse and you have a bond on the warehouse. You pay it off long term, which makes it a non-current liability. And then a current liability is short term, for example, when you need to pay off your debts for credit that you took for items that you took on credit.
Thank you very much. 100%. You see the definition of non-current liability and current liability is the same posture that we took from the asset. It's correct, the student, to say, your non-current liabilities are liabilities beyond 12 months periods. E.g., if you borrow a loan, you've just involved in a loan of 3 to 5 years, it becomes your long-term liability, your non-current liability. If you're involved in bond, there's no bond that is being paid in a 12-month period, is also becoming your long-term liability. Then your current liabilities, we are actually referring to creditors, those suppliers that you need to attend, in 3 months, 1 month, and so on. But within a period of 12 months, everything must be done. We regard those ones as a current liabilities, including overdraft. If you go to the bank and make some arrangement in terms of overdraft, that overdraft will be reflected as a current liabilities. Also, your accruals. Sometimes your accruals take the shape of creditors. They are amount that is accrued to the business but is not yet paid. In terms of your creditors, you also list there under your current liabilities. I'm happy with that. Let us address the issue of the equity. Anyone has got an understanding of the equity?
Good evening, sir.
Yes.
Good evening, students. What I understood is that basically as the liability.
Yes, your network, but we have captured your points. We've captured your points.
Okay.
Anyone want to attempt the issue of equity? Yeah, this one I will better explain when we. Yes.
I think equity it's what interests the owner of the business in the business. It where interest of the owner lies in the equity because it has to do with capital and the profit and loss. Should ever there be any profit, it goes under equity.
Happy. Another one?
I've been raising my hand over here. Can you hear me?
Yes, please. Chip in.
Okay.
Can you deposit your input?
I take equity as the stake in the business, whether it's by the owner or for a larger organization, for shareholders or whoever has some stake in the business.
Okay.
Or they get to enjoy profits or, incur losses based off of how much they put up at stake into the business.
Okay. Yeah, excellent.
Yes. Just to add on top of that, as for equity, it also means that all the information regarding what the company has, what is owning, what is it that is expecting maybe from the debtors and so forth.
Okay.
In the other class, they explained or I understood equity to be the assets of the building minusing all the liabilities of the business. Sorry, rather, yeah.
The remaining.
Yeah, let me
Good
consult.
morning, sir.
Yes, yes.
Good evening. I
Yes.
think assets is the share of the company's net worth that the owners can claim as their own.
Exactly. I'm quite excited with the input. Let me consolidate as follows. In simple terms, in order for us to be able to say we are rich or not, what factor can we look at? Equity basically is what you ultimately, after you pay all your liabilities, you pay all your expenses, that has been left to you. That will be your equity. To simplify, we'll deal with the issue of the accounting equation. Let us deal with the asset first. We even use a mathematical calculation at the equation level to say your asset is equal to liabilities and equity. It means that if you want to deal with the equity, your equity will be your asset minus liability. What is left, you calculate and put aside. Then you go to financial statement. You take income minus expenses, you put aside. When you combine the two, will constitute your equity. That is what you own. So I like how you understand from perspective of asset and how do you understand from perspective of income and expenses. But ultimately, all those two components you need to combine to reflect your equity. Then we can say now we are rich. But if you cannot make that determination, your equity, we don't know your equity. We don't know your equity. For example, if another guy was making a straight line example to say, if I'm a taxi owner, what would be your equity around that? What will your equity, beside the money that we are generating on a daily, weekly basis? Because it's not your equity. you still have to deal with the issues related to maintenance of your car. Do everything, and ultimately you calculate to say, hey, this is an amount that I have. Basically, you are not rich on the basis of sales that you've made. You are rich on the basis of sales minus expenses, asset minus liabilities, then you combine. So it's not a matter of quantities, no. We need to apply an appropriate method to say, indeed, this gentleman is rich. So I'm able, we'll be able but to expand on that when we do the equation. Income, anyone can understand. I think income and expenses are straightforward, the gains and losses, but for purposes of clarity and consistency, anyone can quickly chip in terms of the income. Yes,
Can I
Gomez.
take a
Income is money gained by the business if ever they made any sales.
Can I try?
Yes.
Income is the money the business earns. It's received as payment for either services. Yes.
Okay. What is the difference between income and the gain?
What is the difference between what?
Income and the gain.
To gain is to receive, so I think it's probably the same thing.
Okay. What is another input?
Can I chip in?
Again, I think when you say gain, you're basically saying profit, like what you're profiting. It's like a net income.
Okay. Another input?
Can I speak?
So can I try?
Yes.
So with the income, I think maybe it's the money that you are making maybe monthly. If maybe I can, yeah. Like for example, let's say maybe your business is making maybe 100K a month. I'm just making an example. So that is your income, the money that is coming in the business, if I can put it that way.
Okay.
Can I also chip in, sir?
Yes, please.
Income is money earned by a business from its normal activities, and gains are earned from activities outside the regular course of business.
Can I also chip in?
Yes.
I'll make a simple example for the people that are being employed. The salary advice, the gross earning, it's an income. Then the net,
yes,
it's a gain. Yes.
Okay. Thank you very much. Let us assist the process as follows. I'm so happy with the definition of income. Apparently, I'm also using with my other, cap of being, involved on tax issues. The student is correct to say income is what you generate under normal business practices in terms of selling. But again, it's a little bit complicated. Normally arise on the disposal of asset. Let us say, for example, you've got computers. We have used these computers for a period of 3 years. But now business has got a general feeling to say, we need to upgrade computers. We are tired of ESA. We need something like app, whatever. Now, the current cost of these computers is at 100,000. But whatever the reason might be, we decided to sell these computers at 110. People were so willing to the extent that so if you look 100,000 versus 110, you've got an extra 10,000. So in the context of taxation, we call it that one as a capital gain. So it's a gain, that one. And capital gain is not just happen on a normal course of the business, something that happen once in a space of 2 to 3 years, for example. And we call it as a capital gain, that one. Alternatively, you've got a building residing to a particular local government authority, maybe in BCM, Buffalo City. Now you want to sell your business, want to sell this particular building. You want to move from East London to Gauteng. They decided want to sell the property, but before you sell the property, you invite the valuers to come forward to say, can you re-evaluate our own building? The current cost of this building is 1 million. But when the evaluation process is finalized, but seeks to indicate that the current building now is worthing 1.2 million. So what will happen about the 200,000? We call it as a gain, or we call it as a surplus. Even that one is not money that is happening under normal business operation, you see. So the issue of gain and the loss, it followed the same consequences. Then if we look at the income side now, if your expenses, whatever the reason might be, are higher than your income, instead of getting profit, but you get a loss. So it depends now, but what was key was to bring clarity on the issue of gain. So there's that aspect which is a little bit more advanced because it's own accounting methodologies. This one, gain and losses. So the issue of income, you must also take into account the issue of fixed deposit. Interest on fixed deposit, money that you lended, you fixed in the bank. All the interest that you are generating based on that investment becomes your income. If you are renting out your building, all the money that you are receiving from the tenants becomes your incomes. Your expenses, you know your expenses, your electricity, your water, and so on, your salaries, and so on and so on. But in the context of the company, whatever that has been contributed by companies, it will constitute capital, but whatever that is remaining will be distributed to company owners and so on. Then we articulated the issue of financial statement above in components. So this one, the first one, this one, we call it, it's a statement of financial position. The statement of financial position, you will see assets in the form of current and non-current there. You will see liabilities in the form of current and non-current there. Then you will see the equity. Equity we identified such is what has been remained in terms of your calculation of your income on that side. Since now we're dealing with the statement of financial position, there's no need to go to the net working capital in terms of your liabilities versus the assets. You only add the equity component. All that will constitute a statement of financial position. Your statement of financial position is key to reflect your capabilities at asset level, but can we able to meet your financial obligation or not? This one is a statement of profit and loss and other comprehensive income statement. This one we want to see business is making loss or not. This one. Making upper is a combination of income less expenses. Expenses are what you are incurring in the form of water, telephone, electricity, and so on. All these necessities for operations, you know, we classify those ones as an expenses. Then your statement of change in equity, this one you can do it separately, but is also covered here. Immediately that you have done for this, you can also take the figure as is and translate to the statement of financial position. Then your cash flow statement will be reflection to say what have you managed to purchase? What have you managed to save in the business? It's a cash in, cash out from the business perspective. Then the last critical component are the notes. Notes to financial statement are the explanation, what is contained from the above. If in your property, plant and equipment, for example, you disposed a particular asset, you need to have a note explaining that. To say my assets were 5 billion before, but I've managed to dispose one of the property which is located in East London, amounting so much and so much. You will explain to the notes. These are the explanation to make sure that the user or the reader of financial statement understand the dynamics in what transpired in your financial statement. Then I'm happy with these ones. During your discussion, you've managed to clarify for me what is a non-current and what is a current. There's no need to revisit on that. I was so excited in terms of engagement on that. I see there's no need for me to explain what is a non-current asset. I'm comfortable with the discussions around that. Then these are the examples that I took for you in the context of current assets. To say your building, your machinery, or vehicles, your furniture and equipment are categories of the non-current assets. These ones are important to understand in terms of their own identity. Obviously, to know it, this one, don't forget the useful life of this can assist the process moving forward. Then your current asset, student has been attempted fairly on this aspect to say inventory in the long term, we call it as a trading stock, but say inventory is one of the current assets. Your trade and other receivables, which is your customers, is your debtors, your cash and cash equivalents is also part of your current assets. Your cash and cash equivalents are referring to the bank, we are referring to the petty cash and so on, all those money issues. That would be our current assets. We're comfortable with the explanation in that regard. Then in terms of your liabilities, I think there's also a fair coverage in terms of bringing clarity around this one to say any liability that exceeds 1 year period in the form of your long-term loans, mortgages, debentures are categorized as a non-current liabilities. We explain for this, I'm comfortable with the clarity and the debate. The definition of what is a liability has been explained. Critical to these ones, probably as we go along, I'll be able to explain, but it's crucial to also to engage on these ones. Is crucially to explain on these ones. For example, sometimes at SARS, it does happen to owe SARS or SARS owe us as a business. That process has its own accounting implications. For example, if SARS owes us money, how do you treat SARS in our own records? Anyone want to attempt? Because I want to clarify a reason why we should have SARS under part of current liabilities, because it can also be part of current assets. Anyone want to attempt? Please.
Can I attempt, sir?
Yes.
Oh, there's someone.
Because this one is also applicable to you as an individual. Sometimes you owe SARS. Sometimes SARS owe you.
SARS pays you. Yeah, I think because there's returns, right?
Okay. Can you repeat it?
I was thinking maybe because there's SARS returns, whereby there's monies that you will get back when SARS owes you, and then eventually they're due to you.
Yeah, just a moment, hold there. If SARS own business owes business money. How do you treat that one?
Isn't it going to be under the account receivables tab and current
Thank you
liability?
very much. Yeah, thank you very much. Thank you very much, Michael. Because immediately that SARS overcharged us to the extent that now needs to refund the business. We treat SARS as a receivable, as a debtor, somebody that we need to pay us. But some is vice versa. It's us now owing SARS. What is the treatment?
Liabilities.
Account payables, trade payables.
Current or non-current?
It's a current.
Current.
Yeah. Thank you very much. Yeah, thank you very much. So if you master those dynamics, so I think I'm happy with the issue of SARS and bank overdraft. Let us attempt this one. Let us attempt this one. Let us say now. Let us say now you've got a firm in Cape Town, but you've got excess of office space to the extent that you decided to rent out. But the client that is using your offices, let us for simplification, is paying per annum is paying 12,000. But instead of paying 12,000, is paid 14,000. Right? Instead of paying 12,000, is paid 12,000. So now for your accounting principles, and underlying assumptions, we are expected to only account for 12 months, not for 14 months. But this particular customer is paid for 14 months now. What do you do about this transaction? You've got an advance payment now. This customer is paid 14,000 instead of 12,000. So we've got an advance payment of 2,000. What is an accounting treatment?
I'm not sure. Not client contracting.
Current liability.
Is it a client control? Like we're owing the client
Yes.
now?
No. A client is owing us business now.
Or the client underpaid?
Overpaid.
Overpaid.
Can you repeat the
Yes.
question, sir? It seems like we have missed the actual question.
The question says, guys, we've got office space in Cape Town. Us, all of us here, we are running a law firm. Now, this office space, we don't feel like we don't want to use. We decided to rent out to other legal guys to say, look, guys, take this office, but you'll pay 1,000 rand per month. But now we are about to close the books of the company. This guy decided to pay 14,000 for the year. Now, when you calculate what is due for the period is 12,000, but we've got an extra amount. So how do we treat this?
Hello,
Yes.
sir.
Oh, okay, sir.
Yes.
Is it not trade receivable? I think it's trade receivable.
Can I try, sir?
So
If
yes,
okay,
I'm happy with these discussions, guys. One says
okay.
it's not receivables. Another one says what?
A current
liability.
Isn't it account
yes.
receivable?
So 12,000
Cannot be
It affects
for
a new
and 2,000
accounting
goes straight to the
term.
bank.
Exactly.
Say,
Yes. Yes.
We could not hear the solution. Many people are speaking.
Yeah,
you
it
allow
is
me?
an income that is received in advance. It's income received in advance, and an income we have received in advance, it becomes a liability to the company. So it would
So-
then be a current liability.
Yes.
Yeah, so and basically, the assets will increase with the 12,000, and then there will be a liability increase for the 2,000. So basically, there's a current liability.
Exactly.
The current liability also because we have income, but it hasn't been earned yet.
Yes.
Can I add
Yes.
something? It's also a liability because the company still owes the customer goods or services. So it might
Yes.
be income, but it's a liability until the whole transaction is completed.
Yes. Let me simplify. Let me simplify. Because all of you are correct. Are correct. But the reality is that the only amount that we can account for 12 months is 12,000. But the outside 2 months period belongs to the next financial year. But we cannot throw away it. Let us recognize in our own account. But let us recognize and put that in under current liabilities. Because now we are owing that guy. So it must be reflected in our own books, because that guy we are owing for 2 months, but the 12 months periods we are covered, we're happy for that. Then we call that one the income received in advance belong under your current liabilities. This is quite dynamic, can also happen under your trade receivables, but in a different form. Trade receivable in a different form. When now is you, when now is you renting, a building of somebody else, then it becomes
sir.
income.
Sorry, sir.
Yes.
Can you like go back to the SARS thing on the first like example? Because didn't get that well. Please.
Yeah. Look, on SARS will take it's not that difficult. But what is important, you must know SARS is owing money, or is us owing SARS? When SARS is owing business, which is owing us, we take SARS and put under current asset as receivables. It's a receivable. The word receivable is a money that is due to the business but is not yet paid. It's a receivable. So when SARS refund us, that amount will be received. But if it's us owing SARS, the amount is payable to SARS. SARS have not yet paid by us. Maybe in the future we need to pay SARS. So there are those, but the accounting treatment is not the same. You must know when you put under current asset, but you must know when you put under current liabilities.
Okay, thank you.
Yeah, let me just quickly wrap up because I want us to also to facilitate the issue of the WhatsApp group. But let me just quickly touch up the aspect of the accounting equation. I will skip the issue of the examples because as part of the process, we clarify what is an asset, what is the amount owned, and so on and so on, in identification of assets. I think I'm comfortable with that. The only aspect that will go deeper and deeper is this issue. Of accounting equation. This issue of the accounting equation is fundamental. Is fundamental in accounting. We need to understand better so that whatever that we are doing is based on this equation. But we will dwell more on this. When you say asset is equal liabilities and equity, call it this thing as an accounting equation. Sometimes you are provided with asset and the equity. But on this one, ube no zero, then you are told to calculate liability. It's simple when it's mathematical, but what is key is an understanding of double entry accounting principle. There's an issue of debit, there's an issue of credit. So when we meet next time, I want us to make an application of debit and credit in the context of the accounting equation. The issue of debit and credit, we call this a double entry accounting system. So, but I want us to practicalize, not to theorize, to practicalize, to say, if we have a transaction, which an account is being debited, which an account is being credited, and why. So this is a journey that I want us, when we meet next time for the purpose of time, I want to make sure that we recap from that. We push very hard in terms of the application of the accounting equation, understanding the dynamics of the debit and credit, and why a particular account has got debit and why a particular account has got credit, and what are the implications in terms of income, debit and credit, implication in terms of expenses, debit and credit. The issue of debit and credit is a lifeblood of the accounting. So just be prepared to address, to be ready to deal with that. If you can read the study units that is also talking to that, so that we improve your performance and questioning around that. I'm expected to stop here, but I want us to make some facilitation in terms of the you need to nominate one of you guys to assist the process, because our participation, I want us beyond the teams session, so that if you can open up the group, part of that group, you also include myself, so that if I can be able to assist the process in terms of providing guidance actually. So who will assist us in terms of the creating the group? Because I want to just to put my number here. I don't know what is happening to the chat now. My chat box is inactive.
Sorry, sir. I think you're the one who needs to create that group.
But
I don't mind to create it.
Yeah,
I don't mind to create it. You can put,
yes, because we need
your number in the chat.
Yeah, we need to nominate a student that will coordinate us. My chat said you can't send message because you are not a member on the chat. I don't know. Can you take my number 083
083
969
969
4557.
4557. 083 969 4557.
Yeah, that is my WhatsApp number. Can we allow a student just to throw their own numbers to the student to create that group, so that we can be able to participate, throughout